Auzubillahi minash shaitani rajim. Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh. I welcome you all to another edition of the online class. And inshallah today we shall be looking at farm records and accounts, which is part of the remaining topic that has not been fully covered before the mock exam. And we'll go through this particular topic in two aspects: the farm records and the farm accounts. The farm records has been fully covered before the mock exam, where we identify the different types of farm records, which are the cash receipt record, the farm diary, the farm inventory, the production record, or what we call the yield record, utilization record, the payroll, and so on, and their importance. We have been able to look at parts of the farm account which remain few to be yet to be covered, and those ones we have looked at earlier. They are the sales account, which we also call the sales and receipt account, and this shows the sales of items sold on the farm and their details. These details include the dates such an item was sold, the quantity, the unit price, and the total price for each of those items. The next one is the purchase account, or what we also call the purchase and expenses account. This particular type of account include all purchases and expenses made on the farm with their details, and these details also include the dates such an item were purchased or such expenses were incurred, the quantity, the amount of such items purchased for the farm use. The next one is the farm valuation. This is a type of account that shows the worth or the value of the farm, and this is usually done twice, at the beginning and at the end of the farming period. At the beginning, when it is carried out at the beginning of the farming period, it is called the opening valuation, and when it is done at the end of the farming period, it is called the closing valuation. The importance of this farm valuation is that it helps a farmer to determine the disposable amount for the farm when it is no longer needed. The amount you decide to sell off your farm will determine what is the value at the end of that farming period in which you are no longer interested in that particular farm again. 2, it also helps to assess the tax payable to the government. The higher the value of the farm, the higher the taxable imposed by the government, and the lower the value of the farm, the lower the tax imposed by the government on the farm. So, and that's why the farm valuation is very important. The third one, it helps us to prepare another type of account we call the balance sheet, because in this balance sheet it's going to tell us all the assets we have on the farm with their value, and that's why that farm valuation is equally needed when we are preparing the balance sheet. The next one is what we call the cash analysis account. This shows all the income and expenditure of the farm over a given period of time. And how do we prepare this type of account? It's also a 2-column account. To the left we have all the sales and the receipts, and to the right we have all the expenses. Now, to the left, that is what we call the total received, and to the right, that is what we call the total paid out from that particular farm. And the next type of account we have here is the balance sheet, or what we call the net worth or the owner's equity. We have been able to at least solve a problem on this type of account in the last mock exam, and the balance sheet is also tell us the time value of that particular farm over a given period of time, and it comprises two things: the liability and the assets. Remember, the liability are those money you own out to an external body, and the assets are those capital that you have that is your own on that particular farm. And the difference in your assets and in your liability is what gives us what we call the net worth or the owner's equity. And that is how we prepare a balance sheet. Of what importance is this balance sheet? 1, it helps in future planning of the farm, and 2, it helps to assess the overall performance of the farm, of the management performance on that particular farm. And these are 2 major essential importance of the balance sheet, or what we call the net worth. So inshallah, I'll move on to the remaining 2 we are yet to touch at all, and this is the farm income statement. It's a type of account that comprises all the farm receipts, or what we call the sales and expenses carried out over a given period of time, and that is how the table for that particular account is being prepared. To the left we have the expenses, and to the right we have the receipts. So we are going to look how do we prepare this type of account. Remember, I said that when you are preparing any type of account, the first thing you need to put down is the title of that particular account that you intend to prepare, so that anybody looking at it will know the type of account you have prepared. So the example goes thus: prepare an income statement account for Icos farm for the month of Ramadan 1441 AH with the following informations: cost of feed at the rate of 2,000 naira, cost of drugs at the rate of 400 naira, cost of water supply at the rate of 800 naira, wages for labor at the rate of 1,000 naira, cost of fuel at the rate of 300 naira, sales of egg at the rate of 5,000 naira, coiled layers at the rate of 3,000 naira, sales of manure at the rate of 2,000 naira. So let's begin to post this account. Now, the title, as I've said earlier, is the first thing, and that gives us what we call the income statement account for Icos farm for the month of Ramadan 1441 AH. So we have on that table the 2 column side, the expenses side as well as the receipt side. On the expenses side, the first item there is the cost of feed, which is at the rate of 2,000 naira, cost of drugs at the rate of 400 naira, cost of water supply at the rate of 800 naira, wages for labor at the rate of 1,000 naira, cost of fuel at the rate of 300 naira, to give us a total on the expenses side of 4,500 naira. To the receipt side, or the sales, we have the sales of eggs at the rate of 5,000 naira, coiled layers, which is also sold at the rate of 3,000 naira, sales of manures at the rate of 200 naira, which give us a total of 8,200 naira at the receipt side. Now, as we can see, the sales, the amount we realize from the sales is more than the amount of the expenses that has been incurred on that particular farm. In order to make this account balance, we are going to balance it at the expenses side, giving us what we call the net income. So for that net income, we have an amount of 3,700 naira added up to the total expenses of 4,500 naira to give us the overall total of 8,200 naira, and that makes that account balance. If in another time we have the expenses more than the expenses we incur is more than the total sales or the receipt, we are going to balance it up at the receipt side, and this is how this particular type of account is being prepared. So that will take us to the next one, which is the profit and loss account. For the profit and loss account, is a type of account prepared at the end of the business period, usually a year, by the farmer with the purpose of knowing whether his business is making a profit or loss. So this record will show whether you are making a progress in a particular type of product you are embark on that particular farm to produce, or you need to switch to another type of products that will earn you more profit. So without this record in place, there is no how. You will just know that you are incurring some expenses and equally some amount of money comes in. There is no way to now see which one is more than the other one, and that's why it is very essential for a farm to keep a profit and loss account. Of what importance is this type of account? One, it helps to determine whether that particular farm is making a profit or loss. Two, it helps to determine the overall performance of that particular farm over a given period of time, which is usually at the end of the accounting period. How well you have been able to done, how well you have been able to realize more profit, or you are making a loss. You will be able to determine the performance at the end of the accounting period with a proper record of profit and loss account in place. The third one, it aids future planning of the farm for better performance. You have been producing a white maize and your consumer loves a yellow maize. It means that it's not likely you make a much profit from that particular sales of that particular produce. So probably if you have run into loss, you need to re-strategize and consider the taste of your consumer, and that is when we are talking about it will enable you to have another plan in which you can excel in another farming period. So the next thing for us to now look at is how do we go about in preparing this type of account. As I've said earlier, the first thing we need to do is to have a title to any information given to us, and the title is the first thing that has to be stated when we want to prepare the profit and loss account. And that's why we have this example here. Assuming the transactions made in Fatia and Sons Integrated Farm as at 31st of December 2019 was recorded as follows: the sales of litter material at the rate of 1,800, loss due to mortality at the rate of 2,300, cost of vaccine at the rate of 2,200, cost of concentrate at the rate of 2,500, the sales of egg at the rate of 4,000 naira, value of stock left at the rate of 2,600, sales of layers at the rate of 3,000 naira. The question now says prepare a profit and loss account for the year ended 31st of December. I have said the first thing again is to have the title, and the title is Profit and Loss Account for Fatia and Sons Integrated Farm as at 31st of December. So now to the posting of this particular type of account. So it is a 2-column account which we have the debit side and the expenses side, as we can see. So the debit side is going to include all our purchases and expenses, what we are going to be posting there, and all our sales and receipts on that particular farm is what we are going to be posting on the credit side. But remember, there is some other information that could be given that we need to know the correct place to post them. One of them is when we are given opening valuation or a closing valuation. Another way it can be stated is the stock left, the farm opens with certain amount of money. The opening of a farm with certain amount of money is still the same thing as our opening valuation or opening stock, and the farm ends with total amount of money remaining in the purse of the farm. That is the closing stock or the closing valuation. Whichever way is stated, the closing valuation is to be debited and the closing valuation is to be credited. Now another thing is that if information is also supplied in the form of you consume certain items that you produce on the farm, or some were dashed to friends and family, you should be credited the account should be credited with such type of an amount, because we should assume that you pay for such an item. If not done that way, you may end up having a loss, which in a real sense you have made a profit, but all those items has not been correctly accounted for, and these are things you must note. So let's see from the information given to this particular example we are looking at now. So with our debit side and our credit side, another thing you should remember is, please, for Allah's sake, always indicate the currency that is stated in the question. In this example we are looking at, it is Naira and Kobo Nigeria currency that is being used. If it is a Ghana currency that is used in the question, you must adhere to that particular currency when you are posting this type of account. So we'll begin from the debit side, which I said it will include all our expenses and purchases that we have made on that particular Fatia and Son integrated farm for the month of December. So the first thing is loss due to mortality. That amount is not in the purse of that particular farm, 2,300 naira. The cost of vaccine, 2,200. Cost of concentrate, 2,500. The wages for the farm workers, 2,400. Giving us the total expenses of 9,400 naira. So we'll go to the credit side, which include all our sales and receipts on that particular farm. Sales of litters is at the rate of 1,800. Sales of eggs at the rate of 4,000 naira. Sales of layers at the rate of 3,000 naira. Stock of value left, as we can see now, stock of value left at the rate of 2,000 and 2,600 naira, which is that money is in the purse of that particular farm, giving us a total of 11,400 naira. And when you prepare any type of account, that account must be balanced. Each of the side must be equal to each other. So but for the total expenses we got there earlier, it's 9,400. We will now balance up with a difference of 2,000 naira to make it 11,400 naira, and that will give us our net profit. In another posting that you may carry out, you may discover that the expenses side is more than the credit side, so you come round to balance up at the credit side, but it's not going to give us the net profit, but it's going to, you are going to have what we call the net loss, and that account will be balanced. And this is how far we will be able to go on this edition of our online class today. Inshallah, an assignment will be given, and employ you all to attempt that an assignment, and for necessary correction to be made if perchance we make any error. So subhanaka rabbil izzati amma yasifun, wassalamu ala al mursalin, walhamdulillahi rabbil alamin.